Hello everybody, welcome back to another weekly market review for F45 trading for the week of Monday, March 9th to Friday, March the 13th. So, pretty amazing price movement to start the week here. I don't know if you guys have opened the charts yet or if this is the first thing that you've seen, but let me tell you, it was definitely nothing short of a rodeo. We have had price surge massively on all major foreign currency pairs, and we'll get into it here right now. So just real quickly, news for the week, just FYI, if you haven't set your clocks back and you live in North America, it is daylight savings time, so go ahead and shift those things forward for the spring. We have some medium impact news events for the Australian dollar for Monday and Tuesday, and then Wednesday we have high impact news events for the pound sterling, the US dollar with CPI meeting minutes and core CPI, and then we have crude oil inventories as the day sort of progresses on Wednesday. A couple medium impact news events for Thursday, and high impact news events, obviously this is a big here for the EurUsd, and which you'll see here in a second. I'll be talking about euro, which had a phenomenal move on it to open up the week. We've got monetary policy on Thursday, so just be careful with euro on Thursday. And then we've got prelim UOM consumer sentiment for the US dollar to cap off Friday. So all in all, a pretty quiet week news-wise until we get into Wednesday, where we have a couple of fairly heavy hitters. And then obviously Thursday's euro news. So that's it for the news events for the week. Nothing crazy. But keep in mind, like I say on Thursday for euro. Now, look at the charts here. So we had price surge higher than way above these highs here, which we were looking for. Price rammed up into 99.80, which again we discussed was this level right up in here. I'm not going to go into that again. And then since then, price has proceeded to fall off a cliff on US dollar, running over 500 pips, which as you can see, I mean, if I go out to a weekly and zoom in, like it has not had, look at that, 3 straight weeks down. It hasn't done anything like that since this price movement up in here. So I mean, we're going all the way back to 2017. So it has been a while since we've seen a little bit of volatility. Great to see. So let's get into this here. So now we were talking about downside momentum on the US dollar all last week, and we got that clearly in here. We had a bit of a mixed sort of range in here on Tuesday and Wednesday, and then Thursday smashed down, Friday really smashed down, and now you can see the opener here to start out the trading week on, at the time of this recording, it is Sunday. It is just about 11 p.m. New York time, going into early Monday morning. And we can see here we crashed through a multitude of major liquidity areas here that were targeted. So as most traders are still enjoying the time with their family, somebody has been pushing the markets around. So as I say, last week we were looking for continuous downward momentum. Now, I'll be honest with you, I didn't think we would have got this far last week. I was kind of thinking more so into this range here, even into the 96.80 level, and we got that very quickly. So we had obviously price kind of stammering in here. We had Monday a big day, down day. Tuesday had a little bit of a low in there, just barely getting, just failed to get below this low here. And then, as I say, Wednesday was straight back up, and then Thursday we had, and with the failure of the Wednesday candle right there, I'm hoping you guys kind of caught that as a green light to go short. As all of our members did, and we saw price then start to smash through and go much lower. So and then Friday really surprised me. I honestly didn't think we would have eclipsed this low on Friday, but here we are. So we got a check mark there, and then again, if we go back, I mean, look what we got here. We have this low here from middle of 2019 run out, so check. We had this low here from early 2019, so this was actually this time last year. We had this interim low here. We had that run out here, check. And then finally we had this low right here from early 2019 run out. So again, another big check right there. Now the only thing that's left is, and I'll just zoom out once, is so this low, this low, this low. Now we're targeting this low here and this low here on the week. I believe there should be no reason why we can't get down into this little consolidation range in here. You see how long price spent in here working this level? I think this is going to be the target, and I'll just dial this in for you guys a little bit closer. That's pretty close there, about 94. We'll just make that an even number right there. I think this will be the target on the week. At a minimum, I mean, again, guys, if we have another, look at this massive day here. So, I mean, 1, 2, 3 massive days down. Until we start to see a little bit of stability in the markets, I could imagine we could see several more of these days. I mean, this week could literally move the US dollar all the way down to levels that it hasn't seen since 2018, and maybe even lower if they really want to get moving. So just be cautious. I mean, if I were you, I would not be looking for the US dollar to run higher. It may come back in here and run up to this level, the 9600 level, or 96 even level, I should say. I wouldn't count on it. It definitely very, very thin price action in here. But I wouldn't necessarily count on them going all the way up there. I believe they'll probably continue to gap this thing down, and basically it's just so traders can't get into the market. So, you know, doing a simple breakout and then you know, retest strategy and then another leg lower, we probably won't get anything like that. More than likely we'll probably just see this thing continue to just fall south. But I would like to see how we stab down and retraced. We could get a little bit of a bit of a move higher. Does it get all the way up here? I doubt it, but I definitely think it's going to move a bit higher than where we're at right now. Now, if we look on the daily, you can see we have right here. So this is where Friday closed and Sunday opened. We can see we have a little bit of a gap here. Do we fill that gap in? Price is starting to climb up there nicely right now. We could leave that gap open, and to be quite honest with you, it'd be great if they did leave it. We did have one candle right here that sort of ran back into the bottoms of those this consolidation in here. So that could be enough. They could just leave that gap open for an indefinite period of time. If they really want to get this thing moving, they could just send this thing down. As soon as we come ram back up into these candles in here, we could see this thing go lower again. If we do manage to get above this little range in here, then I would be looking for this gap to fill. Does it want to go higher than that? That's going to be the $1,000,000 question. I don't think we're done on the downside, and I definitely wouldn't be looking for longs on US dollar right now, because I mean, look at all the instability. The coronavirus is just getting heated up, and I mean, there's economies that are starting to come to a halt. I mean, you guys can read the news. I don't need to get on here and tell you it, but needless to say, I think that the dollar is in for a lot further downside from where we're at. So EurUsd, same thing. This thing really moved. So we had the close on Friday at 112.90, call it, depending on what broker you're at with, and we see this thing surge up over 200 pips for the open of the week. Absolutely incredible. Look at the gap in here. So now, does it come back and fill this gap? I would really like it to. We have lots of lows under here, but again, if this thing wants to come down into here, obviously the US dollar is going to have to come back above here, and I don't know that's necessarily going to happen. So we'll just have to kind of wait and see. But just check this out. So we have obviously this level here got ran, this level here got ran, which I didn't put another one on, but I guess I could do that now. And so we have only one, we have a couple of targets higher. That's not what I wanted. This target right here, which they just failed to get above by a few pips, and then of course this target in here. Now, where are we going to go in the week? I believe if the US dollar continues to drop, as I think it will, that will take us up and back into this range in here, and so I could easily see 117.20 as a potential target for this week. If they really want to get moving, I don't think that would be a stretch. And I mean, if you look at where we're at right now into relation to where the target is, I mean, that's another 300 pip move. I mean, look what we've done so far since price reversed under here. I mean, it's a 700 pip move. Could this thing move another 300 pips to the upside? why not? It's already done 700 pips in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, call it 2 trading weeks. Pretty impressive stuff. So anyway, I'll be watching this here. I would like to see the euro. Again, if I haven't made that clear, I think we're going to continue to the upside. I'm definitely not going to be looking for shorts. I actually took a scalp on euro on Sunday here, and I'll show you what I did, and I was wrong. So price gapped open here, and then we had another big surge, and price was kind of sitting in here, and then we had this candle just eclipse that one right there. And so I looked at that on this candle here as it came back up and it failed. I got short, and price came down into here, and then I was actually looking for the gap close and to get a nice little start off to the week of would have been about 90 pips to start off the week. And you can see price came up 1, 2, and 3. Obviously my stop was just right above here, so but you can see what price wanted to do. So I'm not getting in the way of any type of counter trend sentiment this week. I believe this thing is going to continue going up, to go up. If it does come down, great. I'd love it if the ideal entry for me would be a surge down below these lows here, a gap fill, a quick shot down below here, and then a reversal. But I'm not going to expect that. I mean, I wouldn't even expect the gap to close, to be honest with you, with how bullish it's been. They're probably just going to keep continuing to jack this thing higher. So watch for that, and don't get in the way of longs on this one. The bulls are in full control of the market, and I think we got higher prices. So that's what I'm looking at for EurUsd. Again, I'll just throw that up here one more time. 117.20 on the week. GbpUsd has definitely ran, but if you can see, remember from what the numbers that I just pulled, so we had a 400 pip movement on GbpUsd versus a over 700 pip move for the EurUsD. So obviously you can see that the EurUsD is clearly the stronger of the two, and but that doesn't mean that there aren't opportunities in pound dollar. You can see the past 4 days last week were straight up. We've gapped open, not as big as a gap as the EurUsD, of course, but right into the level that I was looking for. As you can see on the charts here, I've had this area noted for quite some time now, and we finally saw them surge up into it, clear all those stops. So I would be looking for a little bit of a retracement on this one. What I'd like to see, now that these guys in here are taken out, we can obviously, this was just this little gap between these two candles that I was looking for, gapped up, mission accomplished. Now, where are we going from here? I'd like to see if they could run back down and ram back into this consolidation area right in here. If we can get that, then I think, and you know what, they may only take it as low as the close of last Friday too. I'm going to be watching both areas, but I'd like to see something like this happen, and then price surging. Now we still have, there is a 4-hour gap. So if I go down to the 4-hour chart, you can see this a lot better. I'll just have to zoom in or zoom out. There is a gap there on the 4-hour where we opened up a few weeks back. That was in end of January, early February, where you can see we gapped up there. It hasn't, gapped down. It has not come back to fill that. We were looking for these areas in here to get rated. They did that at the open of the week here. So now I'm looking for a nice retracement and then a punch higher. Again, do we get back into the, you see the bodies of these candles in here and the highs of this candle here? Do we get all the way back down there? I don't know. There could be lots of support in this area, so it may be a very shallow run, but I am looking for this gap fill, and probably if we continue higher on EurUsD and lower on US dollar, I'm going to drag this line out here because this could be the target going forward on GbpUsD. We could see price potentially get all the way up to 132.20, which, not a big stretch. We're only talking about 30 pips from here to there, but still, I just want to note that on there. Very, very nice range, I think, on the week. That could be a potential 175 pips if we got a gap close and then a bounce, and even more than that if we price runs all the way back down to this area on the daily. So we'll watch for that, but I am, same thing as EurUSD, looking for higher prices on cable as well. EuroGBP, real quickly, we saw that big surge to run those stops above the market from last week that it created, that little shelf right there, and we're right back in the consolidation here. Now, as the EurUSD is running higher and GbpUsd is running higher and US dollar is running lower, what they'll do is they'll continue to consolidate EuroGBP to let those other two pairs run higher in tandem, because typically what happens is, again, is one should consolidate, the other should run as this EuroGBP is going up or down. And as what they do is they consolidate this pair to allow both of those two to run in unison higher. So that's more than likely what we're going to see, but I think we're probably going to see more consolidation in here. So this won't give us too much of a guide as to what the other two pairs are doing, but I believe we can, to get that information, we just look at the the US dollar, and that will give us all we need to know. US dollar down, Euro up, EurUSD up, GbpUsd up is what I'm going for this week. UsCad, look at this. Now, UsCad is directly attributed to oil, the price of oil, and oil I'll talk about here in a second had an absolute disastrous fallout in the markets last week, and Sunday candle open was even worse. It is bad out there, folks. The markets are getting crushed. Commodities are absolutely reeling, so be very, very careful. It's probably going to get a lot worse here before it gets better, just so you know. Now, UsCad had a big pop-up to start the week. Look at this close. Close on Friday came in at 134.26, and it surged over 300 pips to open the week. Wow, big. I mean, UsCad has not seen this kind of movement since all the way back here in 2017, and then previous to that all the way back here in 2015. So it's been a while. This thing has been asleep for, look at this. Look at this consolidation. 2019 consolidation. Slight bull market in 2018, coming off the bearish down spike in 2017. So finally this thing's moving. Big gap higher. I think we're going to go even higher. I believe, again, this is affected by crude oil. So if you look at the Canadian futures contract, it's the exact opposite of this. If oil goes down, the Canadian currency goes down with it, because it's such a massive part of its economic GDP numbers, crude oil. It affects it greatly. So if crude oil goes down, it takes the price of the currency down with it, the futures contract, and that is the exact opposite of what you're going to see here with UsCad. UsCad will go higher because of that. So I think there's more doom and gloom in the oil market, which means the Canadian futures contract is going to continue to go lower, which means the UsCad is going to go higher. I think we're probably going to see price easily surge above here this week. So 137, 138 on the charts, I think, is going to be something that we're going to see. I'll borrow this guy right here. You know what? Call it 138.20. We'll just stick with the 20 levels here for now, until further notice. But I think this could be an easy target on the week. So we'll see how that pans out on the week. Now, what do we do from here? Do we come back all the way back down and fill in this gap? I doubt it. Honestly, I don't think that's probably going to happen. We may get a little bit of a retracement, possibly down to this old high way back here from May of 2019. We could see price come back down into there, retest, and then run higher, but I definitely wouldn't be looking for the gap to fill in this. It's just too aggressive, and crude oil is dropping too fast. I don't think they're going to come back and reprice all the way down to here into this area. I think they'll probably just leave it up here, if they even do come back. So UsCad getting crushed. So hopefully that makes sense for you guys. EurUSD, whoops, I went to an hourly there. EurUSD, I'm looking at higher prices. GbpUsD, I'm looking at higher prices. Consolidation for EurGBP, UsCad higher. UJ, US yen. Look at this. This thing just gapped down below these two, 1, 2, 3, 4 old lows. from 2018, and now we're back into this massive consolidation range from 2016. So huge down spike on UJ. Again, rightly so from the move of the US dollar. 385 pips to the downside. Where is this going from here? Well, there's a whole bunch of areas under here they could be stretching for. I'll drag that out in time. You guys can do your own analysis on that. But chances are we could see them, if they really wanted to get south, run right back down to this consolidation area right here. And if they want to keep going, I mean, there's a big range down in here that they could come back down and refill all that back in if they really want to get heavy on this this currency. So careful with UJ, because it's fallen, and you know, do we come up and fill this gap? So this is what I'm going to be looking for early on this week. So if the gaps haven't been filled by Tuesday, I'm going to assume that they're not going to fill, and I'm just going to look at getting short on a lot of these. Long on you know, these pairs, short on USCAD and short on UJ. If these gaps don't get filled by, you know, end of day Tuesday, that's what I'll be looking at, and continuation downside for Wednesday, Thursday. Okay, Australian dollar, look at this thing. What a mess, what a disaster. I mean, just price closes up here at 66.40, and to open up the day, I mean, it's just how would you like to have been on the wrong side of Aussie on this one here? You see this gap down here, so you think, oh, let's do a simple gap fill. And I got caught on euro, so trust me, I didn't do Aussie, but I mean, look at that. You're looking for a quick 40 pip scalp to start off the week, and then price comes in and just absolutely destroys the shorts. 300 pips. I mean, sorry, more than that. 320 pips. So, and then just for this thing to look at this in within 45-minute time frame, completely reverse. So unbelievable. So like I say, guys, I think there's more of this to come, so just be very careful. Lower your leverage if you are trading with live funds. Lower your leverage, for God's sakes, as much as you can, or just maybe stay out of the markets for a bit until this dies down. Stay in demo land. I mean, I'm not going to let you guys figure that out for yourself, but there could be more of these things to come. I mean, it's only Sunday, for God's sakes. Okay, crude oil. Here's the bad news on crude oil. We are now down to $30.45 a barrel. Wow. Yes, I was looking for lower prices. Yes, you can go back in time and look at all of my previous videos from, I don't know, October of last year, saying prices are going to go lower, and they did. And then we briefly came back up for a little bit of retracement here, and we had 1-2 weeks straight down. And again, I gave you these levels down here. Look at this little X right here. I haven't changed these charts since last week. $42 on the week. Last week closed down. The week actually came in, the low was 41.03. So a very impressive downslide on crude oil. And then look at the gap down. Again, monstrous, guys. 41.60. all the way down to 29. Wow, I didn't know it actually breached $30. Oh, Jesus. Hasn't been this bad, folks, since, as you can see over here, 2015. And now here's the big thing. So OPEC, all the major economic oil producing countries got together and said, we got to do something to curb this. We got to come in, step in with the reduced demand coming out of the global production cycle because of all the ridiculousness around the coronavirus and the state of the economies and everything coming apart and unglued at the seams here. They came together and said, well, let's start cutting production and trying to prop the price of crude oil back up. Well, essentially Russia came in and said, no, screw you guys. We're not doing anything. We like price lower, because if price is lower on crude oil, it puts the U.S. shale companies in deep trouble. A lot of those companies were already running with massive deficits. And so when crude oil, when it costs them more money to drill a well than it does to produce it, then that means trouble. That means they're not breaking even. That means they're not paying their debt. That means they're getting worse credit ratings. That means companies go belly up. And when that starts to happen, that whole market comes unhinged. And guess what? There's Russia sitting on top saying, well, you know what, guys? We've been producing oil at a steady rate since the dawn of time, and we can make money at $29 a barrel, and it doesn't affect us. We don't make as much money, but we still make it, and so screw you guys. Good luck at the bottom. So that's really all they're doing. They got their essentially foot on the throat of the shale producers, and they're not going to let up. And so we'll see what happens going forward. I mean, if we really go back, you can see the price came all the way down to $26 back in, when was that? Back in 2016. So do we go lower? And this chart only goes back to 2008, 2007. So you'd have to jump on a longer timeline, continuous price on the crude oils contracts to look at how far back it will go. But we're getting down into the mid to low 20s, and who knows? I mean, crazier things have happened. We could even see teens with this market. I'm going to put this on the chart, though, right here. Basically, folks, if price goes down below $25, be worried. Be very, very worried, because this economy is going to come to a screeching halt. It's going to be bad, because if price gets all the way down there, that means that production isn't going forward, because China's all locked in, and I mean, everybody's just sitting at home waiting for the other shoe to drop. So ugly, ugly, ugly. Anyway, I don't want to necessarily offer anything on this. We hit the level. So my level on last week was here, these lows here, these 1, 2, 3 lows. We got that, so we can check that off. And I said possibly price could come all the way down to $35. We smashed that again, under $30 now. So where do we go from here? Well, $25 is next on the horizon. So we'll see what it wants to do in here. We'll see if price stabilizes and wants to climb back up, or if this is it, guys, and it falls off a cliff again. So lastly, gold. We had a bit of a gap up on gold. Nothing major. Nothing major. It's already almost closed in here now. So we can see, and again, my chart only goes back to 2017, so you'll have to get on a longer time frame to see what's happening. But I'm looking for gold to continue higher. That's all there is to it. If everyone's pulling their money out of US dollar and pulling it out of oil, and equities are going, falling off the face of the earth. Look at S&P. Look at it, opened down again this week. Look at this. Look at the fall off on this guy here. Now, in relation to where it's come from, some repricing is definitely in order, for sure. And I think we'll probably be below here. We'll probably be below 2,700 on S&P by the end of the week. But you can see that they closed it here in a big gap down again, and it's still running. So everyone's pulling their money out of the stock market because they're worried about losing everything. And so what happens to that? Well, some people will put their money into gold. This is not gold, this is silver. Excuse me, one second. And I think gold, we're probably going to see 1,800, maybe even 2,000 on gold in the next little while. So I wouldn't be shorting gold, let's put it that way. If price gets below here, we can talk and we can say, okay, you know what, maybe we got to revisit this and see what's happening. But I don't see them coming back down here again. I think they're probably just going to keep taking off. So I'm bullish gold. So that's all I've got for you guys. Good luck this week. You're going to need it. Markets are going to be volatile. Take it easy. Reduce your leverage. Whatever you do, so you're not blowing accounts out. If you're on the wrong side, don't get offside and start counter trading like I made the mistake of. Learn from me. Thank God it was only a tiny little 10 or 15 pip blip to start the week, which is easily made up. But just so you know, guys, I think right, I think we're going to be heading lower on US dollar and higher EurUsd, higher GBP, higher UsCad, lower UJ, lower Aussie dollar. Oh, and Aussie dollar You know what, guys? I just wanted to point that out. Aussie dollar just fell short of that low rate there. So this week here, I believe we're probably going to see, I'd have to zoom in a little bit more to see that, 62.40s and lower on Australian dollars. So a couple hundred pips lower than what it's at right now. So that's where I'm looking for there. Lower on crude oil. Again, do we fill the gap on crude oil? That's another question. I don't know. I don't have the answers to that. They could leave this open for a little while. So just FYI. And I'm looking for higher prices. I'd like to see them fill the gap on this. They almost have here now. You can see they've come down and just about filled that gap. Do we come any lower than this? I doubt it. I doubt it, but don't be surprised if they try to reprice back into here one more time. And there are a bunch of lows right in here. So just because I've got to do it, I'm going to put that on there. That could be the target if we really start stabbing down. Like if they come below the open, the opening gap and start coming down into here, then I'll be looking for them to rebalance under here. Okay. But don't just get long in here and leave your stop somewhere down here or anything like that. Like keep a tight stop. If you do decide to get long or anything like that after the gap close, I would probably have a tight stop probably underneath the bodies of these candles in here somewhere and looking for higher prices. So we'll see how that goes. But anyway, like I say, good luck this week, guys, and we'll catch up to you for the next recorded free market review next Sunday. Thanks for watching.